Hello guys, let's start reviewing the trades I have taken this week. This week I have taken uh, four trades, and that was on gold itself. And I'll show you the narrative behind it and the trade idea. Why did I took the trade? Okay, so let's start from the first trade I have taken on the gold, and it was on 24 November, which is on Monday. Okay, so let's start from the daily. So, so what idea I had on this trade? On the daily, I was expecting what daily expansion. Why I am expecting this thing? Because we had SMT with silver here. Okay, if you see, this is the Friday candle. Friday candle came down from the SMT with silver at key level. Why it is a key level? Because it is a swing low. Okay, and what happened here? It closed inside this candle range. Okay, when we close inside the previous candle range, we can expect following candle, the next candle, the candle number 3 to expand. Okay, simple. So daily I am expecting Monday to continue to this upside. Okay, and if I want expansion candle, what I else want, I want to see, small wick. So what is the criteria for small wick? We have to identify the 50% of this previous candle. So though the body is small and the wick is long, so I have marked the 50% of this wick. And if you see that time candle was respecting the 50% of this previous, previous candle wick. So yeah, daily is having bullish bias. Also, we have this small wick criteria also fulfilled. Also, we are looking for expansion, and we have this failure swings as a target. Okay, drawn liquidity, bias, everything is identified on the daily. If you come to the 4 hour, why I came to the 4 hour? Same logic, because I want 4 hour also to align with daily. If you see, we form the SMT and this 4 hour candle, which is a 9 p.m. candle. Okay, it closed inside the range. When 4 hour closed inside the range, form SMT. Okay, then what I can expect? I can expect following candle, candle 2, candle 3 to expand, candle 3, candle 4 to expand to this draw on liquidity. Okay, and if you see what else we have, how the bullish candle form open, price open here, came down, it from the wick, open low, high, close. Okay, this was my idea. So 4 hour daily was clear. If you see now, if you see what time it is 8:23. That means what this candle. Okay, this candle from the swing point, candle 3 expand. We didn't make the drawn liquidity, so we can expect continuation move. If I am expecting this candle, which is a 5 a.m. candle to expand, so how can I take the entry? So I can take the entry if I see the 1 hour and 30 minute swing point. Okay, if you see that time 1 hour from the swing point, because why this candle on silver, this candle took bunch of lows on silver, but it failed to took on the gold. So we have SMT. If we have SMT, then what I can expect? This is a candle too, because this candle technically took this candle low and closed above. So I was expecting this 8 a.m. should open low, high, close. Okay, so I was expecting the following candle to expand. So if I am expecting the 1 hour to expand, what I want to see, I want to see that this next candle should open, came down, respect this 50% and form the order block so that I can take the continuation trade. If you come to here, this is what happened exactly. So see the time. This is 8:20. That means 8 a.m. candle. 8 a.m. candle open, came down to the key level. What is the key level? This fair value gap. Also, we have M15 fair value gap, and we closed above, came down, and this bullish candle closed above this consecutive down close candle. Then I took entry here, market order. I kept my stop loss, and I was targeting 2 hour. What happened? This can this uh, I got taken out here on this on this candle. Next candle took me out, and it was a loss. I will show you on the trading view. My internet is bit slow, so let's see how long it will take. So if I'll come to the gold and I'll come to the daily. So see, this day I have bullish buys. This is what Monday, the beautiful day, just all this down liquidity got taken. Beautiful price action, but it is what it is. Let me mark this daily, and if I'll come to the 5 minute, so where did I executed the trade? I executed at when 8:20. Okay, where is 8:20 here? Here I executed. If you see here, I executed. Market went up, took this short-term high, and it reversed and took me out. So this trade I got, I executed the trade here. Okay, I kept my stop loss here. Market went little bit and it reversed and took me out. So this is the first loss I took, but I re-entered and I'll show you why. So the idea and narrative is same, but I was looking for re-enter the position. So here I re-entered at the 9 a.m. open when the 5 a.m. candle completely closed. See this 5 a.m. candle closed bullish. Okay, still we have drawn liquid intact. So I was expecting 9 a.m. should open low, high close. Okay, I was expecting 9 a.m. expansion. If I am expecting expansion, same criteria applied here. What I need M30 or H1 swing point. So if you see here, H1 we don't have anything. I was expecting this candle to move to the upside, but it failed. Okay, so if you come to the 30 minute, what I what what I have 30 minute form the swing point. This is a candle 2 and closed inside the range. That means what 9 a.m. is opening within the fractal model. That means what 9 a.m. is opening within the candle 3 of M30. So what I was expecting if this candle form irrespected the fair value gap and close inside the range, this following candle should expand. Simple. Okay. So I was looking to take trade on this 9 a.m. open on M3 time frame. Okay, this is the time frame alignment. All the thing was looking perfect, but this trade didn't work out. And if you see what happened here, uh, price open. Okay, this is 4 hour open. Price open on the next candle came down, took the short-term low and closed above. We have the fair value gap, we have nice V-shape reaction, and I took the market order here and placed the stop loss just below it. And this trade also didn't work out. If you see what happened here, this trade, this trade totally reversed and came to the H1 fair value gap, then expanded to the subside and took all this target. So if I'll evaluate my the trade idea, so what I can see here, if you see this is a short-term high. On H1, it already took the short-term high. Here also one high, here also one high. The two short-term highs were already taken, so there is a chance price can retrace or reverse or whatever it is. Okay, we don't know, but if we took some kind of liquidity, then new phase of price delivery can occur, like some kind of retracement or maybe reversal or maybe expansion or maybe consolidation. So here I should have waited for new I should have waited for new protected low to be formed, which formed here. Okay, which formed here. How? See this candle came down, came to the fair value gap and closed below. I think this trade I could have avoided. Here I could have avoided one loss. This is the valued loss in my eyes. Okay, this is my model, and this is the valued loss in my eyes. So this thing I need to take consideration, and let's see what actually what actually happened. So if you see here, see this fair value gap. What happened on the 9 a.m. It came down to this fair value gap and closed above. Same model. 9 a.m. closed inside the range. What I can expect? Following candle to expand. Simple. Okay. And this is what happened. Model worked out well, and market went to all these highs. But I didn't took any entry here because I already taken two losses. So this was my risk management plan, and I didn't get FOMO, to re-enter here and cover my losses. So here I followed my trading plan, risk management. Also my psychology was not that bad, but still it get I get frustrated when when you have the direction right and everything was working, but market took you out and then it reversed. So sometimes this thing will happen, and we cannot do anything. Okay, so here on the Monday I took two loss, And here is the checklist. I followed all the plan. Okay, so I have no regret because this was in my plan. Also, all the criteria in the checklist is already been met. So let's come to the third trade. So third trade, what happened? Third trade was my mistake. I can say I got greedy. So I'll show you here what happened here. If you see, we form we form this. See, this is a Monday. Tuesday, what it went? Tuesday close inside the range. Then why I buy here? Okay, why I was looking expansion. So if you see, we close inside the range. That means what? The following candle should come to this daily fair value gap or should expand to the downside. Okay, is Monday expansion, Tuesday close inside the Monday range, then Wednesday should come to the downside. But why would I take buy here? I'll show you in the lower time frame price action signature. If this is a reversal, that means we are at key level, and if you see we close inside the range, that means what? This high is supposed to be protected, and the next candle should expand to the downside. But if you see the lower time frame, what happened? I'll show you. Come to the 4 hour. Okay, so where is the previous daily candle? See, here is the previous daily candle. Okay, what happened here? Just see. If this is a previous daily candle high, price should expand to the downside. Okay, why it came again to take previous daily candle high? That means what? This high is now not getting respected on Wednesday. So if you see the daily open, daily expanded to the upside. Okay, and we form this candle. If you see this candle and this candle highs are equal, so this is equal highs. Okay, so here also I knew that market cannot reverse, from the failure swing. So my idea was to target to this failure swing. First idea. Okay, but what happened? If you see, this is the 11 a.m. candle. Okay, if you see this candle already took this, already took the failure swing, already took the down liquidity. But I was bullish because why? We are not respecting previous daily candle highs, and what we did here. I'll show you. See what we did here. If you're not expecting the previous reversal candle high, that means what? We are on the expand. I am bullish. I was bullish. This bullish bias was determined by the lower time frame price action, not from the daily. Okay, so this is not so high probability, but from the lower time frame price action, we can determine the phases of price delivery. If you see, we came above the high and we are ranging. If we came above the high and we are ranging, that means what? We are not reversing. So if it is a range, then that means what? It is a continuation move. So that was my whole idea. I am playing the continuation to this upside, equal highs. Okay. Then if I want to take entry, what criteria I need? I need H4 C2 closer. Okay. What happened here? If you see this candle came downside, okay, came to the downside, and what it did, it it closed above the range. Okay, on this candle I was expecting what? Expansion, but this candle what it did, it it opened, it go to the upside, took this liquidity and closed below. Okay, so this is showing the counter to your buys. Like I was bullish, then why the hell this candle closed, bearishly? So here I have neutral buys. So I don't know because I was not bullish and I was also not bearish. Okay, then what I did, I came to this 1 hour. Okay, I was waiting for more price action. If you see, we took the high and we closed below this up close candle. That means what? That means this is a change in state of delivery, which is showing bearish continuation move. Okay, if it is a bearish continuation move, price here already respected. Okay, see, we closed below this up close candle. This candle open, go to the upside, respected, and came to the downside. That means what? Now, if you see, this is a V-shaped reversal signature. If it is a V-shaped reversal signature, then what should the following candle do? Following candle should continue to the downside and form the fair value gap. Simple thing. I was monitoring. I was totally reading that time. Okay. Then what happened? If you see on this candle, okay, on this candle, what it did? If we came below this low and we are not manipulating, that means what? We should expand away or we should range. Simple. Okay. Then what we did? We closed aggressively from the SMT. with silver and we closed aggressively to this upside. That means what? This is a actual manipulation of the day. This is not. This is fake manipulation. This is actual manipulation day, and what we are doing, we are disrespecting this up close candle. Okay. Also this breaker, if you see low, high, low, higher high, lower low, we are disrespecting all the bearish PD array. And now I understand, for my bias on the daily, we are on daily expansion. I have bullish bias, so I was looking to take trade on this candle. So this is what 9 a.m. candle. If you see 9 a.m. open, came down, this 10 a.m. aggressively closed above. That means what? We formed the C2. Then I was looking for continuous trade on this candle. Okay, simple. So this is what continuous trade look like. If you see aggressive move to the downside and upside V-shaped reversal with fair value gap, good momentum. And what happened here? If we form the down close candle on the 11, if you see the time 11:1, okay. On the next candle open, I was expecting bullish expansion. 11 a.m. open, came down to this fair value gap, closed over this down close candle. That means what? We formed the week of the 11 a.m. Now I took entry here, I placed my stop loss, I was targeting this high. Simple. Okay. Then what happened? See, price went, I think 2.3 R or something like that, and it reversed here. Why it reversed? Because this was the gold was, that day was weaker asset. Silver already took the high, but gold failed. Silver was, strongest pair, so it took the high, but gold failed and it really reversed. It was a break-even trade for me. So here 1 is to 2.03, like exact 2 R it went and it reversed on me. So this was also break-even trade. So what lesson I learned from here? If I am taking trade, I am getting taking long on the weaker pair, I should target 1 is to 2, because it is not, hype. It is not, what I'll say. It is not always price should go and take those highs. It can reverse also if the correlated pair took the high because it was the strongest pair. So that time silver was strongest and gold reversed from there because it was a weaker pair. Okay, so this is the third trade I took, which is a break even. So earlier two loss and this one break even. Still I was good. If you see, I followed the plan here, and also I have general some emotions here. So it is what it is. Now come to this last trade of the week, which I have been taken on the Friday. So let's start review. If you see all my trade look exactly same criteria, same checklist I am following every time. Okay, so if you see this, what we are doing, we came above the high. If you see, and we are not manipulating, that means what is the next high we can target? This high, simple. Okay, simple drawn liquidity is this high. So, Thursday, if you see the Thursday is bank holiday, so it was a small ranging candle. So I was expecting Friday should continue to this upside to take these highs. Okay, simple. If I am expecting expansion, what I want small wick. We have the small wick here. If you come to the 4 hour, what do we have here? So if I am expecting expansion, what I want 4 hour swing formation. If you see daily open and directly hit to this previous daily high. Okay, so there is no week. If there is a no week, that means what? Price can revisit to that area most of the time. So if you see our daily profile, open high first, then you will say why you took entry. But see, if let's suppose be logical. Okay, we first open, go to the high. Daily profile is invalidated because on the bullish day we want open, low, high for high and close, open, low, high, close. Okay, but it open, go high, went high first. That means it is invalidated. But what is the signature? Okay, if it went high, then why we are leaving this failure swing? Let me zoom it again. See, see this bullish candle, see this bearish candle, see this bearish candle. So we are leaving this failure swing as a draw on liquidity, and we came below the opening of the daily candle. We have the SMT. Okay, and what we did, I didn't execute it on here. I was waiting for 4 hour swing formation because this is not the swing, because we closed below this previous candle low. So I was waiting for this candle to close above this bearish candle. Okay, then what we did, we formed candle 1, candle 2, candle 3, and I was expecting this 9 a.m. candle to expand. Simple. Okay, why? Because we are leaving behind this failure, leaving behind the failure string. Okay, and also we have this drawn liquidity. Also, we have average daily range is not breached. See this line, this is the average daily range of the gold. So that is how I determined, my my narrative. Where should I take entry? Okay. If you come to the 1 hour, what I need, if I am expecting 9 a.m. to expand, what I need, M30 or H1 swing point. Okay, if you see here, so we already taken the high. Okay, why I look for to take entry here? Because when we take the high, short-term high, three things can happen: price can range, price can reverse, or price can continue to the upside. But what we did, we came above this high, and this candle closed above also. We formed the fair value gap. That means what? We are not manipulating this thing. If we are manipulating, then why the hell we didn't, aggressively down close below this, below this candles to form the change in state of delivery? So here I cannot just look for continuation trade because I have to wait for protected swing. So when we took the high, I marked this key level as a fair value gap on the 9 a.m. candle. 9 a.m. candle form this fair value gap. I waited for M30 swing formation. If you see M30, this candle, bearish candle, came down also, took this previous candle low and closed over. That means what? We formed the swing inside the 9 a.m. Now this, I was expecting this candle to continue to the upside. How did I took entry? So basically I took the entry on the M3 because it is a M30 swing formation, but I took screenshot here on the M5. So I'll show you here. See, this is the M30 change in state of delivery. If you see consecutive down close candle, closed above, price closed above this series of consecutive down close candle, and we have the fair value gap. Fair value gap shows the momentum. Okay, then I took entry here, market order. I kept my stop loss below this body, and I held this position towards this high because this was my final target for the day. So this was a win. Also, we have the continuation trade here. This candle, consecutive down close candle, came to this order block, price closed above. So now here is also one second entry. So this is the nice trade, and I booked here 2 hour. And mostly this week is a break-even week, not a win or not a loss. It is a break-even week. Okay, so this is the checklist, and I have marked something here. See, when we came to the M30 fair value gap, see this thing, key level inside the H4 entry model, M30 fair value gap. When we come, we have SMT as well as PSP. What is PSP? Precision swing point. That means what? I'll show you here. Precision swing point means when one asset form the bearish candle, another asset form the bullish candle. That means what? It is a bearish close, then silver form the bullish close. Okay, that is PSP, precision swing point. Okay, it's showing the strength switch. Also, we have SMT here. So this is the high probability fair value gap with SMT with PSP, and this trade worked out. So yeah, so there is there is something I have to add here. Ideal target is swing highs and lows. When price took it, the new phase of price delivery can occur. I targeted little bit higher to cover 1:2, which is not ideal. What I was saying here, so if you see, ideal target is this high. Okay, I took entry here, but I placed my stop loss here. It was not covering 1:2. So I keep my I keep my target high, little bit higher to this high. But this is not ideal. Why? I saw many times when price come above these highs, it generally range or maybe it can reverse and whatever it can do. Because if price wants to reverse, if it is moving from here to here, if it wants to reverse, then where it should, reverse from? It should reverse from a key level, and this high will act as a key level. So it is always better to target to those highs. So this was the little note I need to add on. So yeah, this is the 4 trades I have taken on this week, and this is a quite break-even trade. But yeah, I am not disappointed because I have followed my plan, and it is what it is. Thank you.